There's no denying the fact that Nvidia has turned out to be a life-changing investment for anyone who bought shares of this chipmaker a decade ago. That's because Nvidia stock has delivered remarkable gains of more than 26,800% in the past 10 years, significantly crushing the 195% gains that the S&P 500 index has clocked over the same period. Investors who bought and held Nvidia stock for such a long time have been able to benefit from multiple catalysts, such as the growth in the video gaming market, the increasing deployment of its graphics processing units in data centers, and additional growth opportunities in markets such as automotive and digital twins. However, the stunning surge in Nvidia stock over the past decade has made it the second largest company in the world, with a market cap of just under $3.4 trillion. Expecting Nvidia stock to replicate its eye-popping performance over the coming decade looks like a far-fetched idea, considering that the size of the global economy is expected to hit $110 trillion this year. That number is expected to jump to almost $140 trillion by 2029, which means that a 35-fold jump in Nvidia stock over the next 5 years would make it bigger than the global economy. Of course, that's absurd. Moreover, investors should note that betting on just one stock in anticipation that it could change your life may not be the best idea. But at the same time, Nvidia may still have more upside to offer to investors in the long run in view of the huge addressable revenue opportunity it's sitting on, which is why it could find a place in a diversified portfolio. Let's take a closer look at the potential catalysts for Nvidia and check why having this stock as a part of your portfolio could turn out to be a smart long-term move. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. In its 2022 Investor Day presentation, Nvidia's management highlighted a remarkable $1 trillion revenue opportunity. The company broke this down into specific markets: $100 billion from gaming, $300 billion from automotive, $150 billion from enterprise artificial intelligence, AI, software $150 billion from Omniverse enterprise software, $150 billion from enterprise chips and systems, and another $150 billion from hyperscale chips and systems. However, this addressable market appears to have grown significantly in the past couple of years. For example, Nvidia now sees a $1 trillion revenue opportunity in data center chips alone. This growth is driven by a predicted shift from general-purpose computing to accelerated computing in data centers, a change aimed at reducing electricity consumption while simultaneously increasing computing power. During Nvidia's earnings call in August, CEO Jensen Huang explained that accelerated computing enables you to perform computing at a much larger scale, such as scientific simulations or database processing. He emphasized that this transition directly results in lower costs and lower energy consumption. Huang also noted that it wouldn't be unusual to see someone save 90% of their computing costs by transitioning from general-purpose computing to accelerated computing. Accelerated computing relies on specialized hardware, such as GPUs, a market in which Nvidia holds a commanding lead. In fact, the company reportedly controlled 98% of the data center GPU market last year. This dominance is no surprise, as competitors like AMD lag significantly behind Nvidia in terms of data center revenue. Assuming Nvidia's revenue opportunities in gaming, automotive, enterprise AI software, and Omniverse software have remained steady at a combined $700 billion over the past couple of years, the company's total addressable market has now expanded to an impressive $1.7 trillion. With Nvidia projected to close the current fiscal year 2025 with $129 billion in revenue, this massive market opportunity suggests that the company's exceptional growth trajectory could continue for many years. This outlook may explain the substantial increase in Nvidia's consensus revenue estimates for the coming years. Nvidia has proven to be a life-changing investment for anyone who purchased its stock a decade ago. Over the past 10 years, Nvidia stock has delivered extraordinary gains of more than 26,800%. In comparison, the S&P 500 index has only risen by 195% during the same period. Investors who held onto Nvidia shares for this long have benefited from several growth drivers. These include the booming video gaming market, the increasing use of Nvidia's graphics processing units, GPUs, in data centers, and opportunities in emerging sectors like automotive technology and digital twins. However, Nvidia's incredible rise has made it the second largest company in the world, with a market capitalization of nearly $3.4 trillion. It seems highly unlikely that Nvidia stock will repeat this level of performance over the next decade. To put it into perspective, the global economy is expected to reach $110 trillion this year and grow to $140 trillion by 2029. For Nvidia to grow 35-fold in just 5 years, it would surpass the size of the global economy, which is clearly unrealistic. It's also important for investors to remember that putting all your hopes on a single stock to transform your financial future may not be the best strategy. That said, Nvidia may still offer long-term upside due to the massive revenue opportunities in its addressable markets. For this reason, it could be a valuable addition to a diversified investment portfolio. Let's explore the potential catalysts for Nvidia and why it could remain a smart investment in the years to come. Nvidia closed its previous fiscal year with earnings of $1.30 per share, and it is on track to more than double that figure this year. Forecasts suggest that Nvidia's earnings could grow by 50% in the next fiscal year, followed by a 26% increase in fiscal 2027. If Nvidia capitalizes on its lucrative addressable markets and sustains 15% annual earnings growth over the next 10 years, its earnings could climb to $11.93 per share. This calculation is based on the current fiscal year's projected earnings of $2.95 per share as a starting point. At the moment, Nvidia stock trades at 32 times forward earnings, which is below its 5-year average forward earnings multiple of 41. If the market rewards Nvidia with a higher valuation and it trades at 41 times earnings a decade from now, in line with its historical average, its stock price could reach $489 per share, based on projected earnings of $11.93 per share. This potential price represents a 254% increase from current levels, which is a significant gain and not entirely out of reach. Therefore, investors might consider adding Nvidia stock to their portfolios as a long-term investment. While it may not deliver the same astronomical returns it achieved over the last decade, Nvidia could still help investors grow their wealth in the future. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.